Today we've got to talk about NVIDIA, ticker symbol NVDA, and the earnings just dropped, and let me tell you, it is a roller coaster. The numbers are out, and the massive run-up that has happened in the past couple of weeks has come to a halt, and the stock is actually down after hours. What gives? And we're going to break down that just in this video and tell you everything that you need to know as a NVIDIA investor. Now, NVIDIA, as you know it, is actually down 3% after hours, but year-to-date up 35% every single year. It has been rising and rising. 41% in the past year. In the past 5 years, 1,300%. In all time, 414,000%. This stock is a massive gainer, but it has come to a halt. Let's unravel why. So NVIDIA just announced their financial results for the second quarter of Q2 2026. So we're going to break down these figures. The revenue had reported of $46.7 billion. That is a 6% increase from the previous quarter, growing pretty good quarter over quarter, and a significant jump of 56% year over year. That is insane. Now that is a slight beat on the consensus estimate that it would be $46.14 billion. Data center. This continues to be the main driver for NVIDIA growth. The revenue is now reaching $41.1 billion, up 5% quarter over quarter, 56% year over year. Insane amount of growth coming from data center revenue. Next, gaming. The gaming segment showed a lot of growth here, a lot of strength. Its revenue was about $4.3 billion, a 14% increase prior to the previous quarter, and 49% year over year. A lot of people are coming back into gaming. They're actually buying these GPUs and getting back on the games. Now, on a non-GAAP and GAAP basis, the EPS of NVIDIA was $1.08 a share. That's beating analyst expectations of $1.05. So slight beat there, but still a beat nonetheless. Now, I think it's important to call out that during the first half of 2026, NVIDIA returned $24 billion to shareholders in the form of share repurchases and cash dividends. Now, it's stated that NVIDIA will pay its next cash quarterly dividend of $0.01 per share on October 2nd, 2025, to all of the shareholders at record of September 11th. But what is moving NVIDIA stock after hours? Despite the strong beat on both top and bottom lines, NVIDIA has been trading really lower in the after hours session here. It can be really attributed to the sell the news kind of phenomenon where investors are taking profits after a highly anticipated event like earnings. Given that we've had such great beats every single quarter, maybe the expectation going into this was that they would smash hit, give insane great guidance, but that's not what they had here. So little underwhelming for investors to come in at a little bit of a beat on EPS, but nonetheless, the stock is down due to that. It had seen a significant run-up, remember, that we saw in the past couple of months. This stock has been on fire and the expectations were extremely high. Now, the primary factor disappointing most investors is that the stock moving after hours seems to be companies' guidance mainly. So the guidance that they gave was that the forecast is still robust, but it may not have been high enough to exceed those expectations. Maybe they wanted no China risk at all, but realistically, you're going to have this China risk. Now, as for their outlook, it does not include China sales. We know that the H20 chip in China is really being scrutinized, and this is a critical detail to this outlook overall. So investors, they know that this export control is going to hinder the stock eventually. There's a lot of regulations with trade coming in and out of China. China isn't able to sell to us. We don't really want to sell to China. And that's how it's going to be until we come to agreement of a better state with China and the US. Now, gross margins, the company expects it to be anywhere between 73.3 to 73.5%, which is really good because they are a hardware company operating at software margins. That's remarkable. Operational expense, they really expect it to be at $5.9 billion on a GAAP basis, and they're Blackwell and beyond. Now, during the earnings call, the management really hinted at the new Blackwell chips are exceeding demand and are well above supply. And that is really expected to continue into next year. The company really said that this next generation Rubin AI platform is going to be on schedule for production next year. And I'm going to display a little video just to show you guys what I'm talking about.
I want to start actually putting China a little bit to the side and asking how you would characterize underlying data center demand ex-China right now.
Incredible. Incredible. We had a record quarter without China, and we just guided another record quarter without China. Uh, and and so the fundamentals are this: one, we're in the second generation of our Blackwell architecture. Blackwell is revolutionary. It's got this new NVLink 72 rack scale computer. The entire rack is one computer, not a whole bunch of computer nodes connected together, but it's one connected supercomputer. And and it came just in time because of this agentic AI technology that has emerged in the last year or so, which causes the AI to be able to think. It can think, it could do a plan, it could reason, does research, use tools. It could, use a web browser. It could use Excel. It could use SAP. It could use ServiceNow.
You guys catch that? It could use SAP, ServiceNow, and Excel. Imagine how many analysts are out there that could be using this to automate their day-to-day, and you can get rid of so many useful tasks and make your workforce just more efficient. Not getting rid of jobs, but putting those equipment to the employees, that is going to up level their skills, and they're going to just be more efficient and drive value back into this business way more quick.
And it could use all of these tools to solve problems, work with other agents, for example. So the amount of computation has gone through the roof. And meanwhile, all of these AI native companies are coming up with all these exciting new applications. At NVIDIA, we use Cursor. It's our AI programmer. Across the entire company, everybody's using Cursor. The amount of code that we're generating and checking in is just incredible. Our productivity's gone through the roof. And so OpenAI, as you know, had $1 billion month. It's incredible growth. If you look at the AI native companies, last year, they did $2 billion altogether. The first year of AI revenues. The second year of AI revenues, $20 billion, tenfold increase in 1 year. And that's just the tip of the iceberg. I see AI opportunities, obviously, across all of the clouds and enterprise and industrial applications and robotics and self-driving cars. I mean, just digital biology and drug discovery. We just see that just AI is just deploying everywhere.
Now that was something. This guy sees the vision of, oh, this AI is going to be the future. But what do Reddit users have to say about that? Eddie here says, obviously a lie. This is very hard to believe. There are reports of chipsets being smuggled into China, and yet the market seems to accept his statements at face value. It raises questions about how much leadership truly knows and whether they are turning a blind eye. If these activities are indeed happening, they should be taken seriously, as prioritizing profit over national interests is highly concerning. I think that is something to really consider in this video here. How much does Jensen Huang know of chips being smuggled? Think about it like this. If you can't sell to China and China can't really sell to you, you're not having this trade back and forth. Obviously, there is going to be some black market out there that is going to buy chips and sell it into China to fulfill the Chinese demand. So Chinese people want chips. They're going to buy from US people that are smuggling into China. And at the end of the day, they still have to buy from NVIDIA. So instead of it being captured as a Chinese number, it's going to be captured as a US number or any other region that is not China. That is just going to be smuggled into there regardless. So something to think about, and how much of these revenues or these earnings are driven by the smuggling of just chips into China. We don't really know. That's something really concerning to think about. That's pretty concerning. Now, some of the key things to look out for are China regulatory clarity. The biggest wildcard remains China still till this day, and the company's guidance excludes sales in that region, though we don't know how much is being illegally transferred from back and forth of China and US. And investors will be watching for any further developments or clarity on this export restriction and licensing. Any positive news here could be a significant boost. The Blackwell ramp up. The successful and rapid ramp up of the Blackwell platform is critical. While the demand is high, the ability to meet this demand will be a key factor to future earnings and the stock performance. Competition. While NVIDIA dominates the AI market, competition from companies like AMD and custom AI chips from hyperscalers like Google's TPU And that could pose a challenge for NVIDIA in the long run. Investors will be watching for any signs or market share erosion. Hyperscaler spending. The continued or robust capital expenditure of major cloud providers like Microsoft, Amazon, Google, these AI infrastructure companies are a key indicator to NVIDIA's future. Any change in their spending could impact NVIDIA's growth. If we see CapEx pull out from these big tech names, we got to be very careful about NVIDIA stock. Valuation, given that the stock's massive rally has been going up in the past couple of months, some investors may be concerned about its valuation. The company's ability to consistently deliver or exceed the guidance has been rampant. You see this in the stock price today. You know, like it's down because the expectation is so high. But where is it on a valuation basis? The PE, 58. Now, that is decently high, but we got to look at the price to earnings growth here. 1.3, the company's growing so fast at 70% in the past 3 years, compound annual growth rate. That's immense. Earnings, 102% compound annual growth rate, 3 years. These numbers are insane. Like, you've never seen a hardware company pump out these kind of numbers here. That it actually might make sense and this company might be justified where it is today. But personally, I don't like seeing EV to gross profit of 42, price to free cash flow of 61, EV to EBITDA of 49. It's so high. But if the company is able to just produce these earnings and these revenues due to AI growth and adoption with capital expenditures from these companies, this company might actually just grow even larger. But take into comparison of AMD. AMD is a little bit more rich on the valuation, given that this growth rate just isn't as exponential as NVIDIA. But where does it compare to Google? We know that Google is one of the most undervalued plays in the stock market today. Zooming into here, valuation, PE of 22, the forward PE of 21. PEG, the price earnings growth, under 1. Like, you're getting a steal deal for buying Google today. And this company has consistent growth of 10%. It just makes so much sense to maybe own all of them, but own Google at the same time if you're going to own any of the big tech companies. I love Google. I do love NVIDIA. This company has been insane in the past couple of years. But overall, that's going to be it. Let me know what you guys thought of NVIDIA earnings. Do you guys hold NVIDIA stock? And if you guys do, let me know how many shares you got down below. Thank you guys for watching. Peace out.